We are talking about disaster and Trump.
Yeah, I'm not having any fun today. I'd rather be at the bar. And I wish I was kidding.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, if corn goes to $3, we won't have to worry about 95 million acres, will we?
Yeah, it's a good thing all those March options, those puts just expired because, yeah, they would have came in very handy for this market. This is no fun for anybody. Very, very difficult to navigate, even for the very nimble navigator. I don't know how you do this one. I think Grain Stats had a great meme out there today where he had the Mario World with just a million impossible things to pass on the level. You know, the one where you could create your own level, the Mario Builder. And yeah, that's what it is. It's impossible to navigate the tweets and the new news. I was so busy, I didn't even get a chance to look at the new tweets and that's kind of why we're doing the format this week. We're going to have a shorter one today. We're going to get some more information before we really start talking like we know what we're talking about. For right now, we just have some cryptic tweets with have fun at the end. And we don't know what it means. And we'll talk a lot more about it when more clarity comes out. But for right now, the markets are in complete and total free fall.
We should back up on what tweet you're talking about, because there's probably many of our listeners that haven't seen the tweets and maybe haven't even seen prices
well,
today.
And plus, by the time they hear this, the things will have changed, you know. So it's
right.
I think what we were going to do this one today for is basically don't overreact and do something you're going to regret when you have this. So I've been working towards getting to the sidelines today for talking to a lot of guys. And when markets act like this, that, you know, and we've said this saying before, markets will act or remain irrational a lot longer than you can remain solvent. This is a perfect example of that. You might even be on the right side of this. You're gonna, you know, you might have puts on, you might be short. You're gonna have to watch this stuff very carefully because it's gonna go both directions. Right now, it's just straight down. And it is the definition of catching a falling knife. We're doing all kinds of things today. Very difficult markets. I've been very careful, and I'm not doing well here at all. Not liking my positions. I'm flat as of the close. I got out of everything. It's very difficult to figure out what it's going to do minute to minute, and you have heavy liquidation, and that is not a recipe for success in the past for me.
Well, I would say this is exactly why we hedge. I mean, you've been bullish for a long time, since September maybe.
Yeah.
You've been on the bull side of corn, and you have a couple days like the past few, and then open today, and what were we down 15 cents in corn? There's no way to predict that. You can't predict the tweet. That's why we do hedge, right?
Yeah, and the incremental sales on the way up is in a slow moving market like that. And in most of the podcasts, we've been talking about how weak the spreads have been, and that was a telltale sign that you need to keep on making sales on the way up, like you do in any bull market. You're never going to get the top or all of it at the top, or I shouldn't say never, but you want to be making sales. This is a perfect example why this in a random February or March day. I started really last week. The wheels have completely come off. What do we cut down? 72 cents in corn in a few days. On news that we knew, there's some new news today, but it was really unhealthy with the spread structure. And you can go back and look at the number of podcasts. So we talked about that like ad nauseum. We didn't like there was max carry in this thing, but then no one really thought old crop was going to drop 70 cents in a few days either. The markets just have a way of surprising people, and the tweets just keep coming, which isn't helping the volatility. And the worst part is the funds, here's what makes it really difficult in corn, have a substantial long position, now most of it being underwater. What are they going to do with that? I mean, how many do they even have left? 250,000, 300,000? We have no idea, because the data that was reported on Friday last week does not take into account the 2 big days down, Thursday and Friday. We have no idea where their positions are or what they're going to do. But they tend to go off technicals and stuff like that, and they start tripping each other's trigger, and it feeds on itself. And there's just this panic in the air. I like to get in the sidelines in this kind of stuff. And, if guys need help, we're definitely talking to guys, but these are just dangerous markets. Fukushima, this reminds me of Fukushima. Didn't make a lot of sense why corn was even going down. It was very bullish at the time. Fukushima happened on a Friday afternoon after the markets closed, and it was just lock limit for 3 days afterwards by the time anybody could even get out. I don't think it even traded for at least 2 days, and the third day it might have traded a little bit. But this kind of reminds me of that. Not as extreme, but still, it's all chaos, and you gotta be very careful in these markets and take it hour by hour, not even day by day anymore. Now you gotta kind of try to feel out what's gonna happen next.
Yeah, and the reason we're not doing a full episode today, and we plan to do a full episode on Thursday, is Trump tweeted, or actually was on Truth Social, I guess, but to the great farmers of the United States, get ready to start making a lot of agricultural product to be sold inside, all caps, inside of the United States. Tariffs will go on external product on April 2nd. And then it says, have fun with an exclamation point.
It's hard to know what that means. There's lots in there, lots to unpack. The have fun tells me that there's probably a plan of some sort, or at least one would hope. The good news is everybody's in the same boat. We talked about this before on it. This is not where you want to start panicking. It almost feels like the government's going to have some sort of put, like a payment, for what's happening because of what they're doing. But again, nobody knows, and that's why it's a very difficult market. We're not even certain what that means. By the time you guys listen to this, I'm sure they'll have it sort of figured out. But again, it's one of those markets where you want to be careful and not panic, and don't be marketing stuff out for the next 3 years because of one tweet. We have no idea what even tomorrow holds. I mean, things could change. He could have a China deal done, or it might be a million miles away. No one really has any idea. They have fun, though, at the end. I doubt that he's mocking everybody, but maybe he is. It seems like there's some sort of plan there.
I mean, you would hope that there is a plan. I will say, last week we talked about the 3 options you have with corn, and one of them was sit on your hands, and that seems to be the best approach.
That's
right
definitely
now.
That's going to first place very quickly with as fast as this is going down. Yes.
Yeah, at least until there's clarity. And again, that's why we're not recording a full episode today. We don't have clarity to even make a hedging recommendation for you.
Yeah, other than don't panic. Again, everybody's in the exact same boat. And they're going to want clarity too. And it's just one of those things where you go do your chores, work on equipment, go for a walk, go on vacation. I mean, I just wouldn't, unless you're in the thick of it and you have to be involved every tick, I wouldn't let it wear you down. I'm going to get out of here as soon as we're done with this. I definitely am done with the markets today. I've been on the phone all day long, and that's just the way it goes. We haven't had one of these in a long time. This one could say it was sort of happening last week when something went wrong. It was supposed to be tariffs at the end of April or the beginning of April. It didn't matter, another month. And then all of a sudden it switched to it's going to happen a few days from now, and then corn did start going down on that. Today was just more fuel on the fire when every night's open stable, and then by the morning it's not good. And I don't know how you break out of that pattern until the funds liquidate what they need to liquidate, and that's going to be 100% unpredictable. So you just have yourself a very difficult market to deal with, at least in the short term. But forever the optimist that I am, I'm already tracking of stuff that currently beat me up very well, but I didn't forget you. I'll be back. But it has to be hopefully the right setup. So I'm going to be following the stuff that I was in. New stuff, of course, will be created out of this. And usually wonderful opportunities come from it. I hope that that's the case this time. So that's what I'm doing. I'm trying to be optimistic.
I like it. Yeah, I'll go back to how I started this episode with $3 corn. who knows where we're going, but that was more of a shock to get you talking today. But
yeah, I've talked too much. And I'm glad we're doing a shorter one. I just wanted to have the more information, and then we'll obviously talk about it. But still, it's catching the falling knife. Some guys are going to do it, and they might be very successful doing it, but just know what you're doing. Other guys will have puts on, and we're going to try to figure out where to get out of these. I have a lot of phone calls to do on that. There was a lot of these puts that were sitting in these accounts, various accounts, for a long time for various reasons, hedging or speculation or whatever. Just a potpourri of puts from corn and beans, mainly beans, that were worth really nothing or very little the other day, and now they're worth quite a bit more as the volatility picks up, the panic picks up, and the implied volatility goes through the roof. So it's just managing that sort of stuff. But even when you're on the right side, it's still difficult. Like, where do I get out? Do I keep this on? Do I just drop the bull side of the bull spread and just ride it down? Do I keep the bear spreads on? A lot of people are going a lot of different directions, which is normal this time of year for a lot of different reasons. It's not all just speculation, trying to make money, different reasons on the farm. And you have to decide, you got to manage the positions that are even profitable, because easy come, easy go there too. At one point, it'll quit going down, and then one tweet later, you're up 25 cents, and there goes all the profit and the panic. So it's, even when you're on the right side, it can be difficult. I wish I had that problem to deal with right now. I have my notes sitting right here on the desk. I listen to literally nothing I say. And if I did, I would be doing really well. I mean, from the last 2 episodes, like, everything basically came true, and I did none of it. But that's trading. I mean, that's what happens.
Trading every time.
Yeah.
And I did just pull up. I was looking the other not recommendation. We don't make recommendations. The other hedging option we talked about was a September 470 put.
Yeah.
That was 30-ish cents last week. It's 47 cents today.
47,
so,
yeah. But,
I mean, that's not a huge profit on that either. But
no, ironically, December's been falling the least. Actually, the most bearish corn contract has been falling. But that's the way when they liquidate the front, where the liquidity is, where the funds are. Mainly, they're going to be in the front. So, yeah, it fell apart in May and July, and they've been the leaders on the way down. And it won't be too long where, if it continues this way, that you'll have the front of corn, which looked impossible not even a week ago, under the new crop corn. But it doesn't matter in markets like that. This is exactly what happens. Just pure chaos and liquidation, and it doesn't need to make sense. Eventually, this will create a lot of opportunities, and again, I'm tracking these, and it will, without a doubt, create opportunities. But timing, I tend to let it bottom, kind of call me wimpy, and just make sure it's the bottom and then get back in. But even that is no guarantee it won't change again to be negative. What I really don't like is the gigantic corn position. They're almost all on the wrong side unless they started buying, way early. Because if we continue to go down like we are, we're going to be at the old harvest lows when we thought we had 2.2 billion, not record demand with a lot less corn around. Just a mess is what this is. That's exactly what this is.
Wow. Do you have anything to add to that?
No, I mean, I think it speaks for itself.
All right. Well, hopefully we know a whole lot more for a special Thursday episode.
Yeah, I think we are going to know a bunch more. And again, it feels like we have a collective put from the government coming. I would imagine there's some sort of plan here or framework that they're working from, I would guess. And we're going to need to see more details. But again, if you need to market, you got to market, I guess, if that's the way it is. And, everybody's finances are different. It's hard to do in the whole here, but it can get far worse too. So I guess the whole episode is devoted to, and when you get into this sort of environment, it is completely unpredictable, expect the unexpected. It's just easy to bottom right now as to go down substantially, and there's no way for anybody to know until it happens.
Excellent.
And that's why
we're not excellent.
Yeah, well.
I was going to say highlight. That's the wrong word. But the good point is that these things do create opportunity. So
yeah,
it's just not right now.
If you're early, you can get smashed. If you're right and you're right in the volatility, you can make a lot of money. But I mean, just know what you're doing. I mean, it is not very predictable. And if you're making a substantial amount of money, either you got lucky with the timing or you had some inside information or whatever, you knew that this was coming. But I didn't like the spreads all the way up here. And that only feeds the flames that it was bullish, but it wasn't like this incredibly we need to ration demand bullish. So that's why it's hard for these people to defend it, because if you're an end user, you just simply watch these markets until it bottoms. You don't step in front of the freight train. So it gets to be hard to find buyers when you have panic like this. It's spilled over in the stock market. The metals are on the move. The oil's all over the place. None of the markets are easy. You were looking good in the morning, and I was laughing last night. By the morning, I'm crying. I mean, it's that kind of market, very difficult, and it's changing very quick. So you can be right and 10 minutes later be very wrong, and that the oil did that today. Nasty reversal on the oil, a stock market, nasty reversal in the stock market, and expect that to continue for all these markets. So just be careful out there, and that's my advice to you.
All right, John, you want to leave your number in case somebody wants to reach you?
218-731-1578.
Thanks, John.
Sure.